Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So, first off, hope everybody had a fantastic long weekend. Official kickoff to summer is always a great time to spend time with family, friends. If you traveled, hope you had a wonderful trip. Uh, we have only a very short trading week, so 4 days, but actually a pretty busy 4 days just in terms of the maybe like the magnitude of the names reporting. So, as you've heard me mention the last few earnings on the radars video, we're through earnings season, so you don't have like the 50 to 100 names reported every night, but of the 3 to 5 names that are reported, for the most part, they're interesting. So, um, what you're going to notice though is that there's a lot of similarities between some of the bigger names this week. For the most grouping, the most concentrated grouping is going to be in software stocks, and there are a lot of very similar software setups at the moment. Also, Chinese names. So I'll get to YY just a second. So, like I talked about last week, and even like a little bit the week before, with the Chinese stocks, a lot of similar setups because a lot of these names have been moving kind of in tandem with one another, right? Because of all the trade headlines, you get a lot of the Chinese tech setups are going to be very, very similar this quarter. Um, so, um, jumping into things here, YY Tuesday before Tuesday after the bell, excuse me. The price to move is about 5.5. All right. So, as you can see, the stock has gotten absolutely crushed over the last couple of weeks. It's hanging, not all at its 52-week low, but relatively close to it. We actually played this last quarter, and it worked really nicely on the long side, but it's just such a tough environment right now for these China tech names. It seems like if they beat, they go down 5%. If they miss, they go down 15%. So it just doesn't seem like any of these patterns are getting rewarded. And a name like YY, which is coming off a good print last quarter, I'd probably be thinking the number would probably be pretty decent. But honestly, just don't have the confidence that it's actually going to get rewarded right now, at least until like some of these trade war headlines start to recede a bit. So one of the bigger names Tuesday after the close, but also just tough overall. So probably will end up being on the sideline for that one. Also Tuesday, workday. So priced in at about 16 points or so. Definitely one of the bigger names for the week. What you'll notice, like Workday and a lot of these software stocks over the last couple weeks, is that the stock has been, great performer, really strong trend, right, sitting right at its 52-week high. So, had a pretty nice move after getting hit last quarter. So they had a pretty strong print. Sold off last quarter. We were able to snag it for a trade and then a rebound, and it's going into this quarter almost like a identical setup, right? Above 8, above the 20, right at 52-week high. So, it sold off after a good quarter in the beginning of March. Options are expensive, expectations are high, and these types of setups and software names have been really tough to get paid on the upside. So, I think the plan is to wait and see if it pulls back into maybe the 50 or even like the 100-day, and then if it gives the opportunity to trade maybe like a bullish swing, right? This is unfortunately, like this setup has been playing out a lot in these software names, and it makes it a little bit tougher to trade for an earnings setup. But they do, or they at least have, for the most part, presented some good swing opportunities. So that'll definitely be one of the bigger names next week. But for right now, I'm thinking, wait and see if it pulls back and then try for a swing. Wednesday before the open, a couple more Chinese names. So Wuba, which is priced in about 6.5, and Bazoon, which is priced in at about 6. So you can see, just flipping back and forth, you can see like both have been acting fairly similar. Like I mentioned with YY, kind of hit pretty hard into earnings. Um, it again, it's just really tough to at the moment. It's really tough to get paid on these types of names. It seems like the ones that are working are the ones that actually miss because they're really getting hit hard. Wuba, and Bazoon, though. I mean, of those two, maybe you look at Wuba because it's actually coming off a quarter where it actually got hit pretty hard. So, in terms of what's working right now, it seems like the ones that miss are getting hit disproportionately hard. So, if you're looking at one or the other, Maybe Wuba because they're actually coming off a weaker quarter back at the end of March or end of February, beginning of March. So of the two, those probably the one like you're looking at. But again, don't really love these setups at the moment. So thinking maybe be on the sideline for that for both of those. Also, Wednesday before the Open, Goose. So Canada Goose. Um, Pricing in about 6.5. All right. So this was a momentum retail name for a long stretch last year, and recently it's been struggling technically. So if it doesn't have a significant bounce before Wednesday morning, it's going to go into earnings below all of its moving average support. Right. So it's not at its 52-week low, but it's certainly not acting fantastic technically. It seems, after last quarter had a decent number, got hit pretty hard. It seems like momentum just technically slowing, maybe fundamentally slowing. Price wise, it seems like it's set up more for a bearish breakdown, right? A little bit of like a pennant forming, and it sold off after a decent number last quarter. So if it sells off after this quarter coming up, it could trigger a pretty significant pennant breakdown. See a monthly pennant that's formed here. So that could be one we look at like a speculative bearish bet. But options 6.5. They're certainly not cheap. So maybe we'd have to get the risk down with like some sort of spread, maybe like a fly, something along those lines. Also, another retailer Wednesday before the Open, Dick's. So the price in about 3.25. It didn't really do much on Friday. So you had two peers report, Foot Locker and Hibbett. Foot Locker was down, Hibbett was up, and Dick's really didn't react too dramatically to either of those. So um, it's just this name was one that we've traded in the past. It used to be a really big mover when they reported, but it seems that the volatility has been tightening around earnings more recently, and actually it hasn't had a huge move in response to a report since last May, so just about a year ago. Um, after the way Friday played out, didn't really have a huge reaction to Hibbett or Foot Locker. Um, it seems like it's kind of in no man's land technically. Volatility's been drying up a bit. Didn't really have a huge move to either of the two that reported. So, I probably thinking avoid, but if anything, maybe like a cheap strangle just in case it reverts back to what it was doing. I don't know, last year, the year before, we were seeing like 7 to 8 point swings. So it's only priced in 3.25, but again, like volatility's been tightening on this name over the last like few quarters. So if anything, maybe like a cheap strangle just to see if it reverts back to those 7 or 8 point moves. All right, Wednesday after the close, getting into some tech names now. So Palo Alto, pricing in about 19 points or so. This is a top software, cyber software name, but it's definitely gotten hit a little bit harder recently. So had a pretty big reversal after a gap last quarter, and it's actually down around the 200 day now, going into earnings this upcoming week. So it's rolled over pretty hard, and then actually on Thursday of this past week, it got hit pretty sharply down to 200 days. So that'll be the first test since January. Last quarter was solid. The quarter before that was solid, and the stock's way off its 52-week highs. So it seems like it could be set up pretty nicely for a bullish rebound bet. But with options around 19, probably would have to get risk down. So spreads, flies, maybe some longer dated calls or some sort of longer dated call spread, just to see if it's good. Maybe it starts to like claw its way back and reset above like this key moving average support range. Viva, another software name. 15 points is what's priced in. Those are monthly options though. Uh, Similar workday. Just a great chart, right? Just in a really strong bullish trend. It's going to go into earnings just about at its 52-week high. So again, similar to workday, it had a strong number back in March and it sold off, and then it ended up, being a great buy the dip and a nice run after it. So, very similar setup this quarter. Seems like it's at a 52-week high. So, options expensive, expectations high. Maybe you're just waiting to see if it pulls back into like trend support and then maybe an opportunity for a bullish swing. Thursday in general is going to be probably the busiest day of next week. Before the Open, only a couple names. After the close, going to be super busy. So before the Open, you have Burlington. Um, so 11 points is what's priced in on this, but they already guided preliminary numbers back in April. So honestly, not sure what type of move to expect here. Last quarter was rocked, right? But then it popped on preliminary numbers. But then both TJX, so Piers, TJX, and Ross Stores both got hit after they reported. So it just seems like there's so many mixed signals, and technically, like the chart, doesn't really like. It seems like it's kind of in no man's land. I will say, like after last quarter's move and TJX and Raw stores, maybe leaning more bearish. Um, but this one, it just doesn't seem like it's like a really like compelling setup one way or the other. But at 11 points, there could be some room if the numbers are surprisingly good or surprisingly bad. Um, but there would have to be a surprise is basically the key because TJX and Ross Stores already set expectations and they already guided back in April. So I feel like the only way you get a big move is there's like a significant surprise on that one. A couple more retailers. So Dollar General, which is pricing in 6.5, and then Dollar Tree, which is pricing in 7. So I'm kind of lumping these two together because they don't often report in the same day. Obviously very similar names, Dollar General and Dollar Tree, and because one typically reports before the other, you can play off. You can do a sympathy trade, but because now they're both reporting on the same morning, obviously that trade doesn't isn't possible. So of the two, I'd say maybe Dollar Tree looks a little bit more interesting. Like it could be the bigger mover just because it hasn't rallied to reclaim the 2018 high yet, while Dollar General is already like well past it. So of the two, maybe Dollar Tree could be the more volatile one, and options aren't that much more expensive on Dollar Tree. So it's 6.5 for DG, 7 for Dollar Tree, but Dollar Tree seems like it could be the one that has the bigger mover. So maybe like a volatility strategy focused on DLTR. That's kind of like the early thinking on that one. All right, after the close Thursday, that's the big day. Costco first up, 9.5 points is what's priced in. If not the best retailer, definitely one of the top two or three, just in terms of performance right now. It had been in a pretty nice tight base above 240, which was the resistance from last year. Just ticked up a little bit, but even so, I mean it's pulled back off its high just a margin, right? But I mean just the fact that it's at its 52-week high or close to it tells you how great this has been compared to a lot of the other big brick and mortar names. Um, Monthly comps haven't really moved the needle much here, and options actually seem like reasonably priced based off the average move the last 3 quarters. So you've had some bigger moves, so October, December, and then back in March. So compared to what the average was over the last 3 quarters, the options actually don't seem too bad. Um, the big thing that's hit this over the last few quarters has been margin concerns, and volatility is a little bit more elevated right now in retail. So I feel like this could be one where you look at a volatility strategy, maybe focus a little bit more on the bear side, just because there have been some bigger moves to the downside recently on those margins, and obviously a lot of retail has been hit pretty hard this quarter. So I'm thinking though that the options seem like they could leave some room there. So that's one maybe like a volatility strategy. Ulta, it's another big mover. 18.5 is what's expected. So coming off a strong quarter back in March, stock has been, not really flying around, but it did hold on to nearly all of those gains, and it's going to go into earnings at still like a multi-year high. Uh, so I'm thinking, broke out last quarter through the top of several year resistance, right? If you go back, you can see, so broke through the top of several year resistance last quarter, is hanging above, coming off a good print. So thinking bullish, maybe something lower debit out of the money, seeing if you get like another pop and extension, so up through like the 360 area, so like another like extension into like the higher 300s, so like 370, 380 area. That's what I'm thinking on Alta. Marvell. So it's a chip name. 1.5 points or so is what's priced in. It Semis are a tough bunch. Just kind of like the China names. I mean, a lot of the trade headlines affect these chip stocks, and just steadily sliding off its high the last few weeks. What's interesting maybe about Marvell is that they did a deal a couple weeks ago, and I'm not thinking really about earnings, but what I like just generally speaking with these M&A setups is when the acquirer trades back through the price when the deal was announced. So that'd be around like 24.50. So if Marvell were to get up through 24.50, I kind of like the trading those names when they get back through that price, so the close prior to when the deal was announced, because sometimes you can see momentum really kick in as traders like kind of get on board with the deal. So maybe hold off on earnings and then wait and see if it gets up into that 24.50 to 25 area, and then if so, maybe you can try for maybe like a slightly longer term swing. Nutanix. So this is 5 points is what's priced in. It moved about 15 last quarter, which was great. I mean, that was one that we caught. Um, so the stock tried to rebound and failed a couple times, and it's going to be going into this report right above like this key, or right at this key 35 to 36 support range, right, from like the last like 7 to 8 months. So 5 points does seem pretty reasonable, especially considering it moved about 15 last quarter. But I mean, I certainly wouldn't be expecting the same size of move as it moved back in March. Um, and in terms of which direction, it seems a little bit tougher because it seems like expectations might have been kind of washed out after March's kitchen sink move. So um, I feel like there could be some potential here, but also I don't think that you're going to see anywhere near like that 15-point swing. So maybe like spreads or flies or even some sort of longer term options just to see if you get an extended move higher if it's good, or if it's bad, maybe you get like another move down into like the 20s as it loses this longer term area of support. But that's definitely one I'll be watching next week just because there was such like a great move last quarter. Uber. So Uber will be reporting its first quarter as a public company, and it actually seems like a pretty quick turnaround. I mean, they only came public a couple weeks ago, so um, it had a obviously like a well documented rocky first couple days, but it's actually been acting a lot better, and it's holding above 40 now, and it seems like it's setting up for like that turn and run which I talked about in our option session last week. So 215 or so is about what's priced in here, and sometimes these first reports can be really tough, just because you don't know what to expect. I mean, not only from an option pricing perspective, but also because there's no historical benchmark to really gauge what type of move you can see on a name like this because they haven't had a report yet. So just from like a technical perspective, the two key prices are both greater than like 4 points away. So it's the high like 45 and then like the low down at like 36.50. So I mean, just those two are greater than 4 points either way. So I mean, maybe there could be a big swing. I mean, it's tough to figure out where expectations are, but overall, I mean, I'm thinking like stick with like the strategy that we have in place now, which is like the longer term bull bet. But it may make sense to pick up like a shorter term put hedge just in case you get like something disappointing comes out and it breaks down. Then because that could put it on a path to retest the low from right after the IPO. So longer term bull bet, maybe like a shorter term put hedge. Okay, two more software names I'm going to kind of lump together here. So Okta, which is pricing in about 11 and a half, and then Zscaler, which is pricing in 9.5. So, um, you know, you can see the similarities between this and Workday and Viva, right? I mean, these are high growth, high momentum software stocks, right at their 52-week high, up a lot since last report. Okta specifically sold off after last report, held the 50-day perfectly, and then took off on a run. Zscaler actually had a big jump and is continuing to run. That's up almost 50% since the last reported. So unfortunately, as much as I like these names and I think they could be movers. Like the problem is that these types of setups have been really tough to get rewarded in the bullish scenarios, right? I mean, it doesn't seem like they're chasing these things higher. So I guess the plan is to see if there's like a washout or a pullback down to maybe the 50-day, the 100-day, and then if so, it seems like that might be a better opportunity to try for a bullish swing versus laying out the money for trying to catch like another leg up, because it just like these types of setups just really have not been working right now. Following along in the same lines, VMW. So this isn't like a high growth software name, but it is kind of a momentum software name. Um, Pretty close to its 52-week high. The options are priced in 13 points. It's up a decent amount since it last reported here, which it too sold off as well right after that. So, the reason this one might be a little bit different and why there could still be some upsides because of the valuation. So the overall valuation's pretty interesting here. So it's not as extended as some of these other names, but again, these setups have been really, really tough to get paid on the upside. But maybe VMW of any of like the software names, like maybe VMW, the ones that's near 52-week high, maybe you could see some extension if the numbers are really strong, and there could be some just expansion of the price to sales ratio on this thing. So maybe a lower risk, lower debit strategy, something out of the money just to see if it pops and pushes maybe up into like the 220 range. But that definitely would fall into the more speculative category in my book. All right, and then last but not least, Friday morning. So all you have is small cap retailer Genesco, and honestly, this really hasn't been a consistent mover when it's come to earnings, and it really hasn't moved much of anything over the last like year and a half. So, retail has been a little bit more volatile, but at the same time, like this name really hasn't demonstrated consistent action that warrants laying out the money. So probably just leave that one alone. All right. So, as you can see, definitely some interesting names, although a lot of very similar setups too, which I'm sure you already noticed. So, we'll kind of have to wait and see. Maybe maybe you get like a break of the recent like patterns where it's just kind of like sell all China names, or maybe like I'll sell a lot of the software names. Maybe if the headlines start to quiet down a bit, you start to see some more two-sided action, but for right now, you got to respect what the market is doing, and right now that's what the market is saying, is that these are kind of a void. So gonna have to be particular with the names we go after this week. But even being particular, there are definitely some interesting names. So definitely plenty of opportunities still. All right. So hope you guys have a fantastic week, and I'll talk to you all tomorrow.